Okay, lady, ready?
Yeah.
One,
Yes.
three.
And we're live.
Hello, everyone.
Ready?
Hi. Good
This
morning.
is ACDC. This is Araceli and
Colette Rabba.
yes, and we're the Dynamic Change. Thank you for being here with us. Today we have a guest speaker, and she is a mortgage agent. Cheryl, do you want to introduce yourself? Tell us who you are.
Hi, good morning. My name is Cheryl Small, and I'm working with Matrix Mortgage Global. We are a mortgage brokerage out of Toronto, and we work primarily in we work in Ontario and all across Canada, and we are a full service brokerage.
Oh, that's
we do everything.
awesome.
Yeah.
Thank you, Cheryl. Today
welcome.
we have, as you know, we give you little tidbits about real estate investing and finances. So one of the subjects that came up last time was about how can we buy a second property? We talked a little bit about getting into real estate investing through Airbnb and maybe renting a room or maybe renting a portion of your house. But the next thing is, if you don't want to do that, how can you get a second property and become a landlord? So one of the things that we discuss is if you do have equity in your home, how can you extract that and get another property? So Colette, can you tell us a little bit about, first of all, what is equity in a home?
Okay, well,
Some of the things that can get you.
Sorry.
What is that?
Sorry, I started to talk and you didn't finish, so go ahead.
Go ahead. So tell us what's home equity and how it can be used.
Okay, so first of all, I'd like to take a step back because I find that we in our fields, in our given fields, all three of us have our own lingo. So sometimes with first-time home buyers, they really are not up to speed, or anybody who isn't actively buying or selling. So I apologize if I do that. I'm sure the ladies would agree too that sometimes it's just faster to say things like STA, or an STA stands for not sexually transmitted anything. But STA is short-term accommodation. So if I say STA instead of saying Airbnb, because Airbnb is really just the vehicle that helps us rent the places. Anyway, so to say anything about income properties, the first and foremost thing is, even my house that I live in, I consider an income property, or sorry, it's an investment, not an income property. It's an investment because I'm investing in myself and my children's well-being, because I know the area, I love it. So when you look at buying your first piece of real estate, take care of yourself first. And then if you can build either an income property in it to make it an investment property, that's great if you're comfortable with that. If you want to use it as equity, equity means how much it's worth versus how much you've paid off, and versus what's left on the mortgage. So, let's say you own a property that's $100,000, or sorry, let's call it $1 million, because let's be realistic. So if you own a property that's $1 million and you've paid off $500,000 on it, and you still owe $500,000, the equity is the $500,000 that you have in it. A bank or a lender, mortgage lender, will give you, if your credit is good, obviously, will give you a portion of that $500,000 that you've already paid off to do something else. So this line of credit is a vehicle, and Cheryl can finish this whole thing, to say, okay, here you go. I will give you, because the bank knows you have $1 million worth of something, and how can you borrow against it? So did that sort of answer the question?
Now, for what I wanted to know on this subject is, I've heard about line of credits, and then there's a term called HELOC, like it's HELOC.
Right.
Cheryl, can you tell us what the difference is?
Yes, I can. Okay, that's a great question because it confuses a lot of people. So a line of credit, LOC, That is, you are borrowing. It's basically a loan, just like any other. A line of credit allows you to have access to money that is a revolving line of credit. So you have access to this money whenever you need it. You don't have to reapply. It's not like a fixed loan that you use and you pay off and then it's gone. The line of credit is revolving. And so the HELOC now, and the line of credit, I might add, you can get a line of credit for a lower amount that is not backed by anything. It's unsecured. But you can get a HELOC, which is a home equity line of credit that is backed by your property. So they will take your property as collateral. Okay. Now the HELOC, it's a little bit more difficult to get into. You can get higher amounts because it's now secured by your property, and you're usually getting a lower interest rate. So that's the quick explanation.
That is awesome. Thank you so much for clarifying that, because a lot of people get really confused. Should I use my HELOC? But they don't even know what that means. So that's great. Now, what's the maximum amount that we can attain? Or I've heard like the loan to value ratio. What can you tell us about that, Cheryl?
For a home equity line of credit, the bank will allow you to have up to 65%. So 65%, and as Colette said, sometimes we use these terms, loan to value. So basically, you can have 65% of the value of your home in a HELOC if you're approved for that.
Okay. The other thing what I want to say too is it's not like they're going to hand you all this money. You take what you need out of it. So if, let's say, this $500,000, you get, whatever you only need, let's say, $100,000 of it to buy a second property as a down payment. You can take that $100,000 and you don't have to spend the rest of it. It's there if you need it, if you want to do home improvements or anything like that.
Yeah, so, and that's what I meant by rotating. It's revolving. It's there for you. You don't have to reapply each time, but as you need it, you tap into it. You take what you need, and you're only paying the interest on the amount that you've used at any given time.
Yeah, and I know Araceli has other questions too. The other thing too is when it's a very, in my opinion, when you do something like that to buy an income property, you really have to have a mortgage agent or a lender who knows what they're doing, because can we talk about fees or any hidden costs, things like that when you do a HELOC?
Absolutely. Now, a HELOC, you can get a HELOC or even a line of credit through a number of different institutions. So, for instance, at my brokerage, we have got, we are working with A lenders, B lenders, trust companies, credit unions, private lenders. So it depends on where you're getting this loan from. If you're going to an A bank, chances are you're not paying any additional fees. If you go to a B bank, yes, they may have some, like a 1% fee in there, or if you're going to a private lender. So it just depends on where you're getting this loan from. But let's say generally, if you are able to go to an A lender, there won't be any additional fees attached. If it's a B lender, which is where you would most likely get the HELOC from, or the line of credit, there might be a 1% fee attached to that.
Okay. So Cheryl, so we go back into the lingo that we use. So what is an A lender and what is a B lender?
Okay, an A lender is, let's just simply state it, it's like your top ranking lender, the big banks that we have. Those would be like your TD, your RBCs, your Scotiabanks, along that line. And a B lender is, sort of below that. If for whatever reason your credit may be a little bit bruised, or you might have claimed bankruptcy, or you might have, sort of blemishes on your credit report, or you are not working a steady income, or you might be working as a real estate agent, or you might be working as an entrepreneur. You may not qualify. You may not qualify at an A bank. You then have to go to a B bank. And I might say we've got a lot of really great B banks. So you shouldn't look at it as a negative. I know a lot of people want to qualify in the A space, at the A banks, because I think there's a little bit of a status attached to that. But the reality is we've got some really great B banks out there as well. And it's really what you qualify for. You can't want to go to the A banks if you don't qualify.
Well, I have a question too. It's not always, and I tell my clients this too, it's not always about the rate that you get.
Absolutely.
So even if you go to a B lender and you get a better rate, that might not be the best scenario. So
Absolutely.
what are things that people can look at when they're going to a mortgage broker or a bank? What can they ask you about the differences?
I think when, again, a lot of people always come in and they're looking at that rate.
Right.
But you need to look at, if you want to get out of that mortgage earlier, you need to look at penalties. You need to look at if you can repay, if you can pay off your mortgage faster. Every year, you might be able to pay a certain amount, and you need to know what that is. So you need flexibility. And I think sometimes what you'll find is the A banks or the bigger banks, you don't really have that flexibility that you'd like to have. So, but I think the main thing is that if you are going to get out of your mortgage earlier, there are huge penalties that you can incur by going to the A banks. And a lot of people don't realize that.
And sometimes the banks are not very clear on that. So that's something that
a lot of times.
It's something that they get away with it. Not that I'm against banks or anything, but the other question that I get a lot when people are looking for a mortgage agent is, how do you get paid? So
yes, absolutely.
Talk a little bit about that.
Absolutely. If you are coming to me and I can take you to the A bank, I will get paid from that bank. I do not have to charge you an additional fee. If you come to me and I take you to a private lender or even a B bank sometimes, and if I am not being paid by them, then I in turn have to charge you a percentage for my fees, because let's face it,
fair.
I can't work for free as well, you know? So it just depends on where I have to take you. And quite frankly, when my clients come to me, I'm working for my clients. I'm doing the best that I can for my clients. So I'm going to take you where you are, where it's the best fit for you.
Yeah.
And I will get paid accordingly, but I am very upfront with you. If I have to charge you a fee, you will know that upfront.
Okay, good. Yeah, that's very good. I know a lot of people too don't know that, because they think, oh, you know, if I have to pay this extra fee to a mortgage agent, why would I go to a mortgage agent? I'll go to a bank or a trust company.
Well, that's a good statement that you made there, because why come to a mortgage agent? Because when you go to a bank, you've got only that bank. You've got one product.
Right.
You've got one. When you come to me, I'm not biased. I've got a plethora of
lenders.
Yeah. I've got a plethora of lenders that I can go to. And so I am now looking for the best fit for you. I am not working for one of these big banks, and I don't have to give you just that product.
Yeah.
So there's that's a big benefit.
It's very important. Yeah. And I think how do you find the market right now with, or just not right now, like since you've had your license? I remember years and years ago, it was a bit of a stigma to say, oh, I'm going to a mortgage agent because I'm not going to go to a bank. But things have changed, I think.
I think that, again, as I was saying before, I feel like for some people there's a status attached to saying I'm with one of the big banks.
Not anymore, I don't think so.
No, not anymore. Not anymore. But since I started, there was a real stigma attached to coming to a B bank or even having to go private. But the reality is we have to look at your situation, and we have to go with that situation that we're in immediately. And you don't have to stay there. Some people come in and they have a situation going on. Maybe they don't qualify at the A bank, but we can work our way back to that A bank. But I think that things have changed. Everybody is looking at just where they can get the funding and where the best fit is for them. So I don't think it matters so much anymore. At least not to the clients that I see.
No, I think sorry.
Sorry, Colette, sorry to cut you off. What I wanted to say is that I think the stigma of going to a broker now, it has been removed because so many people are not perfect for an A lender.
Yeah.
And, you know, if you go to a bank, for example, and you don't qualify or get declined, now you have a credit hit.
Yeah.
And now if, in order to go to a different, let's say another financial institution or a broker, then you're gonna get another hit. Versus going to a broker, they will do one hit for you and they'll
Absolutely.
shop around with the correct lender so you don't have to do it twice.
Absolutely.
And it's sort of the same thing for insurance brokers. When I look at my client, the same thing. I also pre-qualify them to say, you know, what is their health status? Do they have any health challenges? The age, all of that counts, because then I can pick the best company instead of you going to a company, apply for insurance and be declined. Now you kind of have like a strike, sort of like the credit hit.
Yeah,
and then it's more difficult to qualify for another insurance company versus me doing that up front and saving you the time to be in decline versus I know a company that is going to approve you. So that's kind of what I wanted to kind of make a comparison, because I think going to a broker, when it comes down to a mortgage, it'll save you time because they make an assessment of you.
Yeah. I think that's the bias that people have to get over. People have to get past their own biases. And I think if they understand how much we can do as agents, as you said, you come to me, I pull your credit once. With that, I can then go to a number of lenders. It's saving you not only time, it's saving you the headache of having to run around to different banks yourself, because that in itself takes time.
Well, the other thing too that I just wanted to mention really quick was something about service. And this is the thing that I find with my own personal banking, if I can call it that. When it comes to going to the bank, the person doesn't know me. The person doesn't know, you know, it used to be that way though. I used to go into the bank, you know, my first house I bought, I don't even want to say how many years ago, but there was a person I knew her name. I knew a little bit of her personal story too. So when I went in there, she knew who I was. She knew who my family was, you know, how are the kids, all that stuff. We don't have that anymore in the banking system because, but with a mortgage broker, this is the thing. I might not talk to you every day. Once the deal is done, it's okay. But guess what? If I know 5 years down the road, or even a year down the road, or whenever I need to sell, you're there, Cheryl. I can call you and say, hey, what do I do? And you're an actual real person that I can phone and say, hey, I have a question. And this is something that all of us can say, that we're actually here for everybody to, you know, ask us questions, call us, even if you're not ready to get a mortgage, even if you're not ready to buy a house or work on your finances. You always want to have these people in your pocket to say, I wish I could fit into a pocket, but you know what I'm saying? Like to really say, I trust you, I like you, I want to keep in touch with you, because I know down the road, I'm going to need someone that I can pick up the phone and say, who do I call for this?
Yeah. But so, you know what I will say to you, yes, some agents might be like that, but with me, what I find is when I'm working with my clients, and we build that rapport, we have that communication going. When I'm finished with my client, I don't just drop you for 5 years. No, I'm keeping in touch with you along the way. I'm trying to make sure that, you know, I'm on top of things. And you can't, for me, you can't leave that for 5 years. You've got to touch bases with your client throughout the year. See how they're going. You know, you might send them a little birthday greeting along the way, or you just want to see how they're going. And I think that I have to have those touch points with my clients along the way.
Well, and I don't know if Araceli is going to ask you this at the end, but we're coming up on 20 minutes. So I just wanted to say, tell us how people can reach you, if you can, and then Araceli will put up a little blurb after. So if anybody has any questions for Cheryl, or if you want to get started on the process, either buying or looking at a second mortgage. So tell us the things that you do too.
Well, as I said, our mortgage brokerage is a full service brokerage. So anything that you need mortgage related, I can take care of. But I do specialize in reverse mortgages for those that are 55 and above. And I tend to specialize, our brokerage really specializes with the difficult mortgages as well. And when I say difficult, those are the mortgages that you may have a problem going to the A banks with. So we are in that alternative space. So if you are self-employed and you're having a problem, if you've got challenges with blemishes on your credit report, we really focus on that. And we are private lenders as well. So that's kind of our niche that we work with. And but of course, if you come to me and you have a need for a mortgage, I certainly can help you with anything.
Okay, and another question too is geographically, who can you help? Because I mean, the world is kind of, you know, we're all virtual right now. So
Yes,
who do you like working with?
Well, as I said in the intro, Matrix is in Ontario, but we also have license to practice across Canada in other provinces.
Okay.
So I can help. We have clients in Alberta, we have clients in BC. So, but we're across Canada.
Okay.
Okay.
that's awesome. Thank you so much, Cheryl, for
You're
sharing
welcome.
that. One more question that I wanted to wrap up with the theme that we have today is, tell us what are the restrictions? Like if I'm going to take some equity out of my house to buy another property, do I have any restrictions? Can I do that? You know,
Oh.
are there rules?
Absolutely. I mean, a lot of people come to me and they say, I want to get a line of credit. That's the first thing everybody says. But the reality is not everyone qualifies for it. So it's nice for you to ask for that. And it has nothing to do with me. I look at the numbers. You have to get a line of credit, a home equity line of credit, you must have good credit. You have to have some way of servicing that debt. So we have to be able to prove your income in some way. And those are really the two main things. And then of course, you've got to have the equity available in that house. Because if you come to me and you want to have a line of credit backed by your home and you don't have the equity, then I have nothing to work with. So I would say that those are the main things that I look at first and foremost, and then we take it from there. So equity in the property, good credit, and you have to have the money to service that debt. Okay, you have to be able to make that monthly payment.
So before we wrap up, I just wanted to continue on what Cheryl said about credit. So one thing that I've been dealing with the client right now is his identity was stolen. So his actual ID was stolen sometime in, I want to say, end of October of last year. He's still dealing with problems with his credit because somebody tried, so they took his ID and then they tried to open loans and take out loans and buy cars and all sorts of crazy stuff. And he's been fighting it. So what are we in? We're in June now. So he's still having issues with it. He's dealing with Equifax. Equifax, it's very, very difficult to clean up your credit. So please, if anybody takes anything out of this Zoom call today, is please change your passwords. Please check on, you know, how many credit cards you have. Make sure that they're secure. Have the two-step authentication where you need to have any password sent to your phone, and then you have a code, things like that. Like this is, you know, I hate to be, you know, really adamant about it, but it's terrifying. And if you have this mark on your credit, it's very difficult, and it might take years for him to actually be able to clear it. And actually something happened with my husband a few years ago too, where with his passport, where there was somebody with the same name, but that was it. But he had some kind of credit issues, and he, you know, my husband was always fearful that that would, there was some kind of like, what do you call it? Like that it would overlap him somehow. So check in with your credit. Is there a way to check in on your credit, Cheryl, that people can do right now?
And I think that's a great question because everyone has to understand how important their credit is. That's all we have, because the credit is affects everything.
Yeah, hold it tight.
Yes, that's
Don't
right.
tell anybody any passwords, nothing.
Yeah, but with Equifax, first of all, you should be pulling your credit every year, and you have the ability to pull that credit for free every year. Now, you can also be on a monthly payment with Equifax to be able to monitor your credit and have them let you know whether there's any fraud going on.
And it's
that's
not
something,
expensive,
pardon
right?
me?
It's quite cheap to do that.
Yes, it is. It's like $19 a month
Yeah.
or something like that.
Yeah.
Very, for the trouble that you can save yourself, it's very worth it.
Yeah.
And so that's something that you want to do because you really want to know what your credit is. That, as I said, your credit is golden. You
Yeah.
need to keep on top of that. And then to keep that, have that extra protection against fraud, it's well worth it.
Yeah, it's
So that's
huge.
something you can do through Equifax.
Yeah, yeah.
I can tell you, I use the service. I use monitoring my credit. They also offer identity
Protection.
recovery as well.
Right.
Oh,
And so you can check if somebody is using your credit card and
Absolutely.
is using it in a different pattern. You have patterns, right? So if you go to the store or if you buy online, they kind of already know what you're doing.
Yeah.
And but if there's anything else that, let's say that somebody booked a hotel in the US
right.
and I'm here, so I know that it wasn't
They
me,
alert you.
right?
They alert you.
Yeah.
However,
Yeah.
if you for some reason don't want to get the service to monitor your service, keep tab on and keep checking every 2 weeks or every week or at least once a month the
Yeah.
balance on your credit cards.
Yeah.
And even in
Oh,
your bank
everybody does.
accounts,
Yeah.
because it is important. I keep tab on that on my bank account basically once a week, and
Okay.
for my credit cards once a month to see if there's any. I cannot do a rebalance of what I've spent versus what is there.
Well, because you're a financial person,
I know.
I was just about to say that.
It is worth it to see. I know it is a little bit of a trouble, but you need to do that because if
I
somebody
agree.
is got a hold of your credit card and they want to continue doing payments and you don't notice it, what are you going to do? How are you
know
going to
what?
report it 6 months later? They're going to say, okay, well,
Right.
you know,
Yeah,
That's
and the bank will
that's
cover
that doesn't make sense, right?
But
Yeah.
I think we have to get used to that. As Colette said, you're a financial person. So the average person isn't looking at their balances
Yeah.
that often. But
And that's what I
it's
want to
something that
make you
we should
aware
do.
of.
It's something that we should do.
Right.
And so that's a really great thing to mention. Yeah.
Well, the one thing too that has occurred to me, and I keep hitting my, I should have this mallet hitting myself over the head because I'm really hard-headed about it because I hate doing it. And that's, I'm sorry, Araceli, but I hate doing my finances. But when I look at it from a perspective of my home finances are just like my income property, and I have to keep track of everything, it's really not that hard because at the end of the year, when I go to my accountant, everything is done.
It's there, yes.
So it actually helps my mental state to do it every month and just get it over with because it's like 5 minutes of my time monthly.
Mm-hmm.
But at the end of the year, it just, it makes me crazy to think I have to do it at the end of the year. And now I'm on a time crunch and I get stressed out and I don't want to do it. So if there's anything and really like 5 minutes every time you get your statement, let's say you can time it out, you can have a calendar, whichever way. If you want somebody like Araceli to help you out and put a plan together to do all that, she will absolutely help you with that. So this is what we're all here for. We're here for you, the viewer. And if you have any questions, if you want to learn anything more, please ask us questions and we'll answer them here too on our little show. But yeah, what else? What else can we say today?
Exactly. So basically what I want to wrap it up. So basically here we have 3 people that can help you either get a new property, first, if it's your first property for you to live in, maybe give you some ideas on how you can convert your existing home into an investment property, even some ideas on where to invest in the US. So we have, I will be able to help you to put together an assessment of what you want to buy. Is this what you're able to do? Remember, everything comes to income. You got to be able to support whatever decision you make. And Colette is here, to help to give you ideas. If this is the right property, is that what you want to do? How can you save some, money?
The right time to buy.
Yeah, what is the right time to buy? All of that thing. And, Cheryl can also save you some time in telling you what you could be approved for. So all of us work together in order to give you the best possible way to achieve your goals. So in whatever stage you are, please contact one of us and just get started. That I think is the hardest part to get into real estate investing. I
Don't
mentioned
be
in my
scared.
I mentioned in my last episode that for the longest time I didn't think that I could be an investor. But I looked at what I did before and I started what I could. So that's the main thing. Look for a way that you're willing to do it and get started. Call any one of us and we'll give you, some tips, ideas, whatever it is. So, but just
So
don't be afraid.
the one thing that Araceli and I always talk about too is that we wish we had professionals like us
Yep.
when we started the process, because really we were in the dark, both of us, when not just with investment property, but buying our own, buying my first house. Yeah, same thing. So to really don't be afraid to, reach out. There's no obligation, just to give us a call, just to say hi, want to get to know you. What's your specialty, sort of thing. So
if I can also just say, I know that a lot of people that I come across too, they are afraid to make that step. A lot of people were raised to buy a house and pay off that house and not to take any equity out of that house for any reason at all. People have to have a mind shift, and they have to understand, and they have to realize that there's other areas that you can make money in. There's other ways that you can invest. And I think that some people just have to get that mind shift, because they're programmed to, okay, I was raised to buy my house, pay it off, not to take anything out of it.
Right. And
what a lot of people have in their mind.
Right. And don't ruffle any feathers. Just keep paying.
Exactly.
I know it's insane.
Yeah. And now we really have to get out of that mind, because the economy is different from what it used to be. So now we have to look for creative ideas and how to start growing our wealth besides the traditional ways to do it, because now it takes longer. Remember, properties have gone up so much that now it takes us a lot longer to be able to pay it off to begin with. So now you have to look at different ways to leverage. Right now, the growth is great in the GTA. So if you are starting to get enough equity, try to leverage that to start getting cash flow. Or, when you get a second property, you can either wait for it to appreciate or get some cash flow in the meantime. But at least your money is working for you.
We need other sources of income, and that's a great option. It's just another option, but it's a great option. And I think people just have to open their minds to that.
Yeah, absolutely. So that is it for today. So if you have any questions, if there's anything that we didn't cover or something that you weren't very sure about, just reach out. All our information is below. Connect with us in our Facebook, and then we'll be happy to answer some questions.
I didn't, did you want me to give my email address now? I know
you can give it to us now, tell to everybody right now.
Okay. If you're trying to reach me, you can reach me directly at 416-578-4187, or Cheryl, CHERRYL, at mmgb.ca. And I'll also leave that information there as well.
Awesome. Thank you so much, Cheryl, for being here today and sharing some ideas.
Thank you so much for inviting me. I had a great time. Thank you so much. If you have any questions at all, anything that we were not able to cover today, please reach out to me. Even if you're not ready now, even if you just like to ask some questions, I'm open to that. I don't have any issues with that at all.
The sooner you get it started, the better.
Yeah.
Okay? If you don't think you're ready, just get started with one of us. It doesn't matter. So we will see you next week. So please post your questions, and looking forward to see you. Yeah.
Sorry. And next week we are going to talk about divorcing people who are going through separation and divorce, because it is COVID. You might all get sick of me.
That's right.
But even on the best of times, divorce and separation and going through that process, especially when you have kids, is really, really difficult. So we just want to touch on that a little bit too. about emotional states and really why you need to work with professionals during the time.
That's right. I'm gonna
Sorry to make a joke out of it.
have lots of clients soon.
Yeah.
Because of that. So
yeah. So
anyway,
honestly, yeah, we will touch on that more. And you know,
have a great rest of the week, and tune in for next episode next week. Okay, Wednesday at 11.
Thanks for joining us.
Thank you.
Bye, everyone.
Bye,
Thanks for
everyone.
having me.
Bye.
Take care. Bye-bye.